Hello and welcome everybody to this short XTB video on a key and very followed market, which is gold. My name is Walid Koudmani, and the topic of this video will be: will elections and vaccine change the outlook for gold? So there are some key things to keep an eye on when it comes to the gold market, especially after the pandemic, vaccine news, the Biden election winning. So let's go and analyze what the key things are to keep an eye on. So we saw that gold had a positive reaction to Biden win, even though after that we saw the price pull back quite significantly because it was followed by the vaccine announcement by Pfizer. However, the initial reaction to the Biden win was positive. The general consensus suggests that Biden means a weaker dollar, so through the Fed's policies, but also higher yields, which is two factors with opposite impact. Now we have the situation where if there is a potential COVID vaccine, could that mean lower market risk and less of safe haven demand, resulting in potential lower gold prices? That is a key situation to keep an eye on, because gold is traditionally viewed as a safe haven asset that performs better when the general economic outlook is more negative than positive. So if we do see more positive signs of a vaccine actually it being implemented, that might be able to have some pressure or add some pressure to the price of gold moving forward. Nevertheless, the global economy will continue to operate in the low interest rates environment, which it currently has, because of the approach of all the various central banks, which are lowering their interest rates more and more to favor spending in the economies that have been really severely affected by the lockdowns. However, negative interest rates can be a positive factor for gold, because it allows more cash flow into the economy that then, in more risky situations, could be transferred into the gold market. However, it is important to keep an eye on the fact that gold trades lower compared to the August peak, but still remains one of the best performing commodities in 2020. So we've seen some commodities suffer significantly in 2020, especially at the first part of it, like oil, while gold is one of the commodities that did end up gaining in 2020, reaching significantly higher levels than it was before. Does a Biden win mean more price gains? The initial reaction was yes, although there are these other factors to consider as well. What to think of a vaccine and how can we interpret history? Let's move forward with that. So, an important distinction is that there are variations in the way that different administrations obviously run the country. So we've had, in the last 40 years, we've had 4 Democratic presidents in the US versus 6 Republicans. And this chart shows us the price of gold compared to the administration that was running at the time. So we have Republican presidencies and Democratic presidencies. We can see that gold made the biggest gains during Democratic presidencies and experienced the biggest price drops during Republican presidencies. We can see that through these lines. And the analysis takes into account only the period, though, after the collapse of the Bretton Woods system. So that is an important key distinction to keep an eye on. Furthermore, pre-election period was usually better for gold prices than post-election period, as the uncertainty and the buildup of tension before that can lead markets to be a little bit more volatile and uncertain. On average, gold performed better during the Democratic presidency than a Republican, but the current circumstances need to be taken into account, as the crisis and massive stimulus, which have been part of this year's main events and headlines. Taking a look at the similar situation from 2008, so we can take a look at this previous slide, we could potentially expect continuation of the upward move on the prices of gold, because even though the Democratic candidate won, which traditionally equals as we see here, gain for the price of gold, we also have the additional motives of the uncertainty and current situation in the economy. Now, gold made a really big rally. Is there more to come? We can see that this chart on the X station shows us this massive spike on the weekly chart of gold from 2018 and 2017 up until now. Scale and length of the current upward impulse is similar to the one from 2008 to 2011, so you can see this is quite parallel or mirrored almost. Nevertheless, the drivers of 2008 to 2011 rally start to surface just now. In theory, we can expect the continuation of the upward move, because of the fact that both times were times of crises, with obviously the 2008 global financial crisis And now we have the coronavirus pandemic with the lockdowns that we are dealing with at the moment. The range trading, though, after previous rally lasted around 20 months, while the price rebounded to the 61.8 retracement level of the Fibonacci retracement of the decline from the all-time high. So around here, you can see that, and here. Price gains look dim, though, compared to the global financial crisis. So in 2008, these two lines compare the two. So gold 2008 low is the red line, gold green line is the pandemic. If we take a look at our local low from the previous and current crises, we can see the upward move may be continued, because it did continue in 2008, although it is important to keep in mind that history doesn't always repeat itself, and we are mostly in unprecedented times. So these, yes, we can compare it to previous crises, but it is also important to keep in mind that things might change between the administration and also the policies being implemented. Moreover, the current consolidation looks similar to the one we observed at the start of the previous decade and this one. So in the beginning of 2020, beginning of 2010. US dollars and interest rates are key factors to keep an eye on. So moving forward, if you are in the market for gold, these are, in addition to all the previous factors mentioned, the US dollar and the interest rates are key factors. And they're tied into the administration because of the fact that they have to work with the central bank, in this case the Fed. Negative real interest rates are a key thing to keep an eye on as well. So we have this chart that shows us the lines between gold, the real interest rate expectations for 12 months and for 60 months, which is 5 years. Now, at the moment, we are living in a low interest rate environment where different central banks are offering money at cheaper rates than they normally would. Obviously, that is to stimulate the economy in this extreme time of need. Now, the scale of negativity is even bigger when we take a look at the real interest rates, because if we look at the 12-month and the 5-year outlook for negative rates, it is quite similar, and it gives a good environment for continuation of the upward move on the gold market because of the fact that interest rates might stay the way they are, or in negative interest rates for the foreseeable future. Moreover, these expectations can still be seen as moderate, because if the cases increase or if the vaccine takes longer than it's currently expected, then central banks will need to take additional measures, which they said they're not worried about taking, as they will do anything they have to, like the ECB, the Fed, and even the Bank of England said that they would back their economies. And finally, we can take a look at this chart with the difference between gold and the real interest rate. As one can see on the chart, real interest rates during the global financial crisis or the European debt crisis stood around -3%, so a -3% on the real interest rate. But right now, inflation is still moderate. But given the enormous scale of monetary and fiscal easing, price growth may accelerate. So inflation obviously being tied to the influx of money as well, which is also tied to interest rates. And if there is more fiscal easing, if there is more monetary investment programs from the central banks into the economies, we could see as well some moves in inflation with it keeping up. And so thank you very much for watching this very quick video on the state of gold and what the prospect after the election and the vaccine news is. It's always a key market to keep an eye on, and these are just some of the key factors to keep an eye on if you're trading in this market. Thank you very much for watching. My name is Walid Koudmani, and good luck with your trading.